continues to be strong in the system. And most banks and NBFCs have participated in the growth. If you looked at Kotak for December as well, you saw strong credit growth. And my view is that this will continue for some more time. If you go back to the RBI policy, RBI actually increased, albeit marginally, the growth rate for FY24 to 6.5 from 6.4, and estimated that this year we will end at 7% economic growth. Now that's probably the best or amongst the best in the world from a growth perspective. So I think banking continues to see strong growth on the credit side, largely urban and consumption-led. Rural is better than what it used to be, but still muted and recovering. So that is really a matter for the NRC and the board, right? It's not something that I'm involved in or I can comment on. It is entirely the NRC of the board and the board of directors who are going through this process. Ultimately, it's a demand-supply issue. If you see, particularly in the last 1 year, banks have raised their deposit rates significantly because they have to fund the growth on the credit side. I spoke about it earlier. The credit growth has been very strong. To fund credit growth, banks have been going out and getting deposits, and given the demand supply as well as the increase in the rates by the central bank, banks have been increasing rates. I think, and if you see the deposit accretion, whatever you have seen announced so far, has been pretty strong in terms of FDs and term deposits. And I expect it to continue even in FY20. It's basically started as a digital savings bank account where you can simply download an app and open a savings account in 3 minutes, right? Which really revolutionized the way savings accounts are opened, and you can be anywhere in any part of the country, at your home, at your office. So 24/7, we have customers who are opening savings accounts. Now, when we have a sizable amount of customers, right, we have embarked upon what are the products that we can offer these customers based on their behavioral pattern. We have a very large base of 811 customers who are 30 years and below. That's a very different segment. That's a consuming segment. That's a segment that likes new things. That's a segment that likes, loans, credit, etc. They use payments a lot, right? So the segment of customers that 811 is very different from, let's say, the private banking kind of customers that Kotak, as you know, is the leader in wealth management and private banking as well. And thus, we have worked out bite-sized products. For example, we have insurance that's bite-sized. We have RDs and FDs that are bite-sized. Our credit card offering has, limits that are for this cohort. So we have ensured that based on customer behavior, need, consumption patterns, etc., we have designed products. So it has moved from just a digital savings account to being a customer cohort where, which is more mass and millennial, that helps us, offer products and services that is customized to that segment.